10th meeting in 2013 of the Finance Committee of the Scottish Parliament. Could I just remind everyone present to please turn off any mobile phones, any Blackberries or other electronic devices. Our first item of business this morning is to decide whether to take item 3 in private and further consideration of a draft demographic change and ageing population report in private at future meetings. Are members agreed? Members have signalled their agreement. Our second item of business is to take oral evidence as part of our Stage 1 scrutiny of the LBTT Bill. And I therefore like to welcome to the meeting David Marshall of the ESPC, Kennedy Forster of the Council of Mortgage Lenders, and Richard Blake, Scottish Land and Estates. And I understand that there's no statement this morning, so therefore, unless you've got one you would like to have, no, I'm quite happy to take any brief statements if anybody has them, but otherwise we will go straight to questions. And the first couple of questions will be from myself, and then I'll open it out to members of the committee around the table. I could just ask yourself, Mr Foster, just to start off. In paragraph 6 of your commission, you talk about the an issue which might be worth considering is that the lower number of high-value transactions in Scotland compared with elsewhere in the UK may result in a greater number of winners and losers for the introduction of a progressive system if its aim is revenue neutrality. I'm just wondering if you can expand a wee bit further on that, on your views on that particular issue.
I think if you looked at UK stamp duty, I think we did a lot of research. It's now 10 years old. 75% of stamp duty land tax was actually raised in London in the south because of the number of high value transactions in London in the south, and also because of the number of transactions itself. I was just speaking to David there before we came in, and I know ESPC have done some research looking at the Scottish Land Register. There isn't the same number of high value transactions in Scotland, so I do believe that leaves the Scottish Government with less flexibility if, as I understand it, the proposal is that the settlement from Westminster will be reduced by the corresponding amount of stamp duty land tax collected in Scotland. So if the Scottish Government are going to maintain revenue neutrality, I believe they have less flexibility probably around setting of the tax rates than they may have had if you'd had a lot of high value transactions.
So what's your view on revenue neutrality? Is that something which you should think the Scottish Government should pursue, or are you of the view that
I've got no view on that at all.
That's fine. I mean, the SPC have given figures to suggest that most people will in actual fact pay less tax or be revenue neutral, but you do express concerns that people in your own area, obviously Edinburgh, Lothians and Fife, would pay more under the new regime as house prices in this region are higher than the Scottish average. But you go on to say that there isn't really much scope for localised taxation levels if as this would run counter to a simple and easily understood system. The situation that you refer to, is that not the case at present?
Yes, and certainly I think you would, any area where average house prices are above the national average, we would be accepting of the fact that that would lead to that area paying a higher rate of tax. Our main concern, I suppose, would be the rate at which tax increases with selling price. If that gradient is perhaps too steep, then it may make it more difficult for people to move up and down the property ladder. So we're certainly fully supportive of stamp duty being a progressive tax. It is just perhaps that rate of increase with selling price that would be our main area of concern.
And obviously you have concerns that the areas of Scotland are not disproportionately affected by the change in law.
Yeah, I think, like I say, you wouldn't, I don't think it would be practical to have regional stamp duty tax. I think that certainly would lead to complexity and would need constant revision, and simply, and while it might be a nice idea in theory, would be terribly difficult to put into place in practice. I do think, however, there certainly needs to be awareness of regional markets and the make-up of those when setting the new stamp duty rates, just to make sure that there are no unforeseen circumstances within regional markets.
Yes, I mean, the issue, of course, is that, of course, Edinburgh is more prosperous than the Scottish average, and so that's obviously one of the reasons why you would actually have that kind of situation.
Absolutely, and like I say, we are fully supportive of stamp duty being a progressive tax. So one thing I would say is that if you look at the disparity in house prices between Edinburgh and the Lothians and the national average, and the disparity in income, whether you want to look at mean or median, usually the house prices, the differential there is greater than it is for income. So it isn't necessarily always matched by perhaps the certainly not whether or not people are cash rich, and certainly perhaps is not matched by income. So like I say, there perhaps just needs to be awareness of those to make sure that there aren't any blockages in the market, and because like I say, anything that prevents people moving up and down the ladder would have a negative impact on the market as a whole.
But the progressive nature of this bill would ease that, would it not, particularly over the kind of cliff edges around £250,000, for example?
Absolutely. I think, yes, we fully support the move away from the slab structure. I failed to see I was saying to Kennedy before we came in here, I cannot think of a rational argument for a change in £1 in selling price instigating a change in £5,000 of tax. Like I say, there is no rational argument for that whatsoever. The move away from that is certainly something we would be very much in favour of. Like I say, it is just that rate of increase that we would need to be careful of to make sure that the differential in tax, for example, paid by someone at £250,000 isn't massively less than, for example, someone at £350,000 or such like, because if you do see that sort of large disparity, then that could create inequalities in the market, and that would be our only real concern.
Thank you very much. Mr Blake, Scottish Land and Estates have expressed some concerns about the taxation of subsales, in particular the concerns of potentially double taxation. I'm just wondering if you can expand on that for the committee.
I think that to try to understand where we're coming from on this, it's worth just rehearsing what might happen in a fairly major purchase if somebody comes along at a closing date for a farm or an estate or a chunk of land or whatever it might be, a business in the countryside. They will see attractions in the business, they will submit an offer, and they will then use the period between the offer being accepted and completion of the sale to sort out how they're going to finance it. Some finance might be in place. They may have to look at subsales to produce some more of the finance. So I think that what we're very concerned about is that the Parliament looks very closely at whether it is a policy objective of the government to do away with subsale relief, which I think seems to be the case in the bill as it happens. We're fully aware that there is scope for abuse of subsale relief, in that blocks of land that have been purchased under missives but not completed can be sold on possibly for a profit, and there is scope there for abuse, and I think that is one of the concerns of the bill team as far as I understand it. But I don't think that necessarily a broad brush approach to stamp out a potential abuse of subsale relief should necessarily block consideration of whether subsale relief properly targeted in properly constructed transactions where there is no attempt for tax avoidance should be part of the bill.
So you're worried about the baby being thrown out with the bathwater, so to speak. Can you tell us how then the Scottish Government can amend the bill if necessary to ensure that the objectives are reached, that we eliminate avoidance, but at the same time...
Well, I suppose that, I haven't looked at the technical detail of this, but I suppose that what the Parliament could be looking at, and the government could be looking at, is to make provision that where there is no profit being made on a subsale, then there is some sort of subsale relief available to make sure that there isn't a double taxation. And I'm not sure whether your question was also referring to the point we made about nominees.
Yes.
Would you like me just to comment on that? Because I think to a certain extent it comes from the same angle, that where somebody wants to invest in a major business opportunity, it doesn't have to be in rural Scotland, it can be in the centre of Glasgow or whatever, they will need to structure the ownership possibly among various different companies or different parts of the business, in a way that they may want to take part of the title in A, part of the title in B Limited, and part of the title in C Limited, which might all be part of the same organisation. And that is a real concern, that if there is a policy wish of the government that subsale relief would not be available, and it would also catch nominees, then that might take away quite a lot of the flexibility that purchasers and potential purchasers see when they see a potential project, and then they have to decide how they're going to finance it or which pocket of their business they're going to put it in. And as I would just reiterate there that I'm not just talking about rural purchases, I'm talking about corporate purchases as well, commercial purchases as well.
I know that other colleagues around the table are going to ask you further questions on that particular issue, so I shall move to committee questions with Jamie, to be followed by Michael.
Thank you, Convener. My first question is to Mr Foster, and he's already referred to the research that the Council of Mortgage Lenders in Scotland undertook, I think about 10 years ago. He mentioned your briefing helpfully sort of sets out sort of some of the findings, but could you maybe tell us what the impetus for that research was and what the methodology was?
This research was carried out by the University of Reading on behalf of CML, but so obviously was carried out by academics. Obviously in 2003 it was probably a different marketplace than we currently have, but it was very much looking at the impact of stamp duty on the likes of the first-time buyer market. It was looking at the distribution of stamp duty and the impact of it throughout the UK, and it put forward a number of alternatives to the current system at that time of stamp duty land tax. I did share that research with the Scottish Government, with officials, when they were looking at bringing forward this particular bill that you're now looking at.
So you've shared it with the government, so presumably you still, even though it's 10 years ago, and as you can see yourself, the market is different, you still think that it has relevance?
It certainly has relevance, and it's something we've referred to the UK Government when we've been making budget submissions over the last 10 years. We've constantly called for the UK Government to move away from the slab system to the progressive system.
Did I pick it up? It's UK-wide research?
It's UK-wide research. It's not purely Scottish research. Make that absolutely clear.
I'm not clear that we necessarily have that, but I wonder if it might be useful for us.
I can certainly. There's absolutely no reason at all. I'll send it on to the clerk of the committee.
Thank you. Also, you expressed concerns about the collection of tax online. You say it's a good idea in principle. But given the issues which there have been with the automated registration to title land system in Scotland, it is important that lessons are learnt from that project. I have to freely concede I'm not aware of the details. I wonder if you could tell us what lessons have to be learned.
Yeah, the Registers of Scotland moved to a system called automated registration to title to land. Now I think that there was a number of government IT projects. I don't know if it was Audit Scotland or the Audit Commission that reviewed them, and that was one of the projects that came in for criticism. It's not a system I personally use day in, day out, but we in the lending industry placed quite a lot of store on that system because it was moving to a system where deeds would be held electronically. It was electronic signatures. At the end of the day, lenders wouldn't have to store title deeds, etc. There was various security advantages of the system, but solicitors have found that system very difficult to use, being very slow, and they've actually said that doing the deeds in the old paper-based way is still their preferred method of registering deeds. Now, my understanding is it's proposed that that system be replaced. The registers, I believe, have changed their IT methodology. They used to have a contract with British Telecom. I believe it's been taken in-house. I understand you're going to get evidence from the keeper at some stage, so it may be worth asking her about that. But they intend, over a period of time, to replace the automated registration of title to land system with a new system, but that system will also deal, as I understand it, with a new tax when it comes into play as well. So it's just a concern that IT projects are delivered. They're notoriously difficult to deliver, from personal experience in the banking industry as well.
Indeed, and we've seen that in the public sector as well. Thank you. I think that's helpful. Can I turn to Mr. Blake? The convener raised this issue about your concerns about the possible double taxation on a land transaction, and I think I've followed you correctly. You were explaining that to finance a purchase, sometimes the purchaser may subsell, sell parts of that property to finance it, and I can understand that. What I can't understand is what is the need for a transaction where I think the way you describe it is B purchases land from A and B, you say subsells part to C, which I understand, or even sells the whole to C. What's the rationale for that type of transaction? Because presumably that's not financing a purchase for them, because C is going to own the whole job lot.
Correct. I can't tell you the rationale for that, but it happens. Change of mind, possibly. Finance from banks not available. Change in circumstances.
Okay. Okay, I think it's useful that we don't actually have a compelling rationale for that.
Yeah.
It would be something we need to explore.
I wonder whether
further.
Could I just go back to a point that Kennedy was just talking to you about? One of the points that we're concerned about, in fact, I hope I'm bringing this in at the right time, is that we haven't got this in our submission, but we are concerned that where VAT is charged on rent on a taxable transaction, that stamp duty, well, the son of stamp duty, land and buildings transaction tax, would be charged on the VAT element as well as the rent, which is another element of double taxation that possibly just needs to be watched. That happens at the moment with stamp duty land tax, and it is a concern of us as an organisation and professionals when they're dealing with any sort of not just a rural lease, but any sort of purchase where there is or rent where there is a VAT element.
Pick you up though, you're saying that if that is followed through for LBTT, I might use one too many T's.
Yes.
That would be consistent with the current form of taxation.
It
so it
would
wouldn't be
be
a change, but it's a long-standing concern, is your point?
Yeah, it wouldn't be a change, but possibly it's something that the Parliament might like to consider, that that sort of double taxation, tax on tax. It's rather like tax on fuel duty at the pumps, isn't it?
Okay, I'm sure that's something we can explore further. Turning to Mr. Marshall, in your paper, you've helpfully done an assessment of the two sample scenarios for the progressive introduction of progressive taxation in the system, and the first finds that just under 40% of buyers would pay less tax, and the second almost 50%. And I think you say although fewer people would pay more, those who do pay more would be more negatively impacted. By that you mean they pay more than those in the first scenario. So a simple question, which is the preferred scenario from your perspective?
Again, I would reiterate what I said previously. It is our main concern is simply that the rate of increase in taxation is not too steep. I think certainly the two illustrative examples that were provided were not entirely unreasonable. There was a slight concern for us around the level of taxation that would be paid at around the sort of £350,000 to £400,000 mark, because there would be a significant increase in taxation at that level, and that would potentially impact a significant number of transactions for family homes in and around Edinburgh. Possibly our preference would be, if you were to look at the first illustrative example, you could see, rather than stamp duty being introduced at £180,000, it could be introduced at a low level still for properties over 125, and that would allow maybe the level of taxation paid on those family homes at around the 350, 400 mark to be slightly lower.
Okay. You And to be fair, you've discounted the prospect of localised taxation.
Absolutely, yeah.
But you posited it as a possibility. So I'm going to ask the question anyway. And you've talked about an awareness. There should be an awareness for localised markets within the system. But would one of the concerns with a localised form of taxation not be that, and because we've been given evidence that there's concern about market distortion, couldn't that be argued that that would lead to market distortion?
Yes, as I say, would in no way advocate regional taxation. I think you have three issues there. One would be the complexity of the system and difficulties in communicating that to potential buyers. The second is precisely what you've said, that it could potentially lead to distortions between neighbouring markets. And the third concern is that it would be something that would require constant revision. If you saw, for example, house prices in Glasgow were to rise relative to those in another area of the country, then it would be something that would require revision again. And I just don't think it's a practical means of taxation to introduce it at a local level.
I'll just maybe ask the other two witnesses their perspective on that point as well, in terms of the idea that this is a tax that could be localised.
I think it's very difficult to define what's actually the region as well. Obviously, the housing market is sort of regionally based. You see, like say Aberdeen's a prosperous area at the moment as well, and in Edinburgh then. Other areas like some parts of Ayrshire are not as strong, but it's actually defining what that regional area is. Even in some areas there'll be isolated pockets, like I stay in Kilmacombe, which is in Inverclyde. Now Kilmacombe itself is quite a prosperous village, whereas other bits of Greenock, etc., are not quite as prosperous. So I think actually defining what is a regional market would be extremely difficult as well.
I think it would be very difficult to define and very difficult to administer, and I think it would cause all sorts of problems for professionals trying to get their heads around it on a daily basis. I think any switch from stamp duty land tax, which we're going to have, to LBTT is going to be difficult enough for professionals to understand, and I think we need to keep it as simple and straightforward as possible to make it work for the revenue collection as well as for anything else.
Thank you. And one final question, if I may, convener, to Mr. Marshall, because I thought this was an interesting point to make in terms of whilst acknowledging that one of the aims of a progressive system of taxation is to place a greater burden upon those who have the broadest shoulders, it is worth pointing out that households buying a home worth £400,000 aren't necessarily, and then it's put in commas, rich. What does that? What do you mean?
Essentially, like I say, at that level, you are talking about almost 1 in 5 transactions of 3 and 4 bedroom properties in the capital. The point I made earlier again is that areas which have higher house prices aren't necessarily reflected by higher incomes. It may be that the value of someone's property has increased. And they are looking to move up the ladder. But also our greater concern would be that if anything that happens that impacts one area of the market is going to have a knock-on effect elsewhere. So it would just be if that increase in tax was perhaps a little bit too steep, it could have a negative impact on other areas.
I wasn't asking about that so much. I was asking about what your definition of rich is. I mean, do you have any form of statistical analysis that says, what the average income is of someone or a family who's buying a £400,000
I think,
or
like
more
I say,
home?
Like I say, you are talking about sort of 1 in 5 3 and 4 bedroom properties in the capital. So that clearly is it's not simply the sort of very upper end of the market. It is 18% in this case of 3 and 4 bed transactions. So we aren't simply talking about the very wealthy there. It would affect a number of families.
Specific statistic, actually, you mean?
Yep.
So it's 1 in 5 of 3 or 4 bedroom properties. So I
yes.
mean, what are we talking about in terms of the overall transactions?
It would be absolutely much lower in terms of overall transactions, but clearly you could not expect a family to live in a 1-bedroom flat in most cases. So I mean, if you're looking
well,
at
I'm actually in the Welfare Reform Committee, so unless you're the UK government, you might that's another point, probably not for this just now, convener. I think I've probably most usefully explored that as far as I can just now, convener.
Michael, to be followed by Malcolm. Oh, sorry, Mr. Blake.
Could I just make one comment on the values that you're asking there, because I can totally understand that the questions so far are being posed to the residential purchases, but I think that one of the planks of the Scottish Government's rural policy is to encourage new entrants into farming, And I think everybody is aware of the cost of agricultural land in Scotland and an additional burden on new entrants who will not necessarily be rich, in inverted commas. They're trying to get their foot on the ladder when they get borrowing to fund the purchase of a small farm. With agricultural values at anything between, I don't know, £3,000 and £8,000 an acre, you're soon going to be into the higher rates of LBTT for these people who don't have an awful lot of surplus cash. So I think just looking at the rural side as well as the residential might just help to inform the committee.
Yeah, Michael, before by Malcolm.
Thanks very much, Convener. I'll direct this question initially to Mr Foster, but I would welcome answers from all of the panel, but it was Mr Foster that raised it in his submission, and it's in relation to proposed exemptions within the bill. In previous meetings of the committee, witnesses have said, we have a clean slate here. It's a unique opportunity to devise a new piece of taxation legislation. Just to accept the current exemptions might therefore be allowing us to miss a trick. Are there other exemptions that you're mindful of, things that you could expect or would want to discuss with the government, rather than, as you say in your submission, if anything else comes up, we'll discuss it as part of regulation and subordinate legislation? Given that we're talking about a fresh bill now, is there something that we could be looking at which would allow us to do it at the appropriate time?
Personally, I can't think of any other exemptions. I know there has been some discussion around energy efficiency, which I think is quite an interesting concept. But, as I say, there's nothing else I can think of at the moment.
No, that's fine.
Likewise, I would echo very much what Richard said previously, that the transition from stamp duty to LBTT should ideally be kept as simple as possible. So unless there is a particularly compelling reason to either remove or add additional exemptions, then I think as much as possible we should try to stay in line with those that are currently there.
I think there are two points that I could usefully make. They're not in our submission on the bill, but they were in our consultation response back in August when the government went out to consultation on the proposals. I think just to echo Kennedy's point there, that we would support any intention to continue the relief for zero carbon homes. Something we would welcome, and it's something that a lot of our members are encouraging and trying to develop in the countryside. And secondly, one of the points that we put in fact, the first point we put into our consultation response, again, to follow on the Scottish Government's stated priority for a vibrant agricultural tenancy sector, we suggested that consideration should be given to exempting agricultural leases from LBTT to encourage new entrants. Again,
I think that's something we might pursue at a later date. But just to go back to the one thing that Mr Foster did raise, and again, from evidence we've heard from previous witnesses, energy efficiency is not necessarily an important factor when it comes to the purchase of homes. I think it might have surprised a lot of us to hear that, but location, number of rooms, facilities are a much higher priority, and if people are considering the purchase of a home, apparently energy efficiency doesn't feature very high, if at all, in their considerations. So would we be encouraging something here, raising awareness of it, if we were to pursue something along the lines that Mr Foster suggested?
Yeah, obviously the Scottish Government consulted last year on their sort of energy efficiency strategy, and as I understand it, they're going to bring something forward sometime this year around energy efficiency. There's a huge challenge in the housing market if the government's targets for carbon reduction have to be achieved, and most of that's going to lie in the existing housing as opposed to new build, and obviously there are building regulations which actually require more energy efficient homes to be built. And really I think it's going to be about how the government is going to achieve its targets through improvement of basically the second-hand market, the like of the social rented sector. There's a proposed new energy efficient standard for social housing. but how's it going to achieve this in the owner-occupied and the private rented sector? And I think in my response to the government, I said there might be some areas where you could require compulsion, but there might be some areas where you could offer a carrot to either the private rented sector or the owner-occupied sector to improve the energy efficiency. Obviously, potentially, LBTT is a way of doing that. Other potential ways are council tax as well, reductions. And I suppose the analogy people always use is the vehicle excise duty, where obviously the lower the emissions from your car, the lower the duty you pay. So I think this is a policy thing. It needs to be looked at in light of what comes forward in terms of the energy efficiency from the government later this year.
Okay, Malcolm to be followed by John.
I think some of the figures from the Edinburgh Solicitors Property Centre on winners and losers were really interesting for options 1 and 2. I think you basically said you preferred option, I should say option B probably more correctly. I wondered whether the others had a view on that, and also I wondered whether we did have any figures for the whole of Scotland, since you all keep telling us that Edinburgh is different. Although I should remind the committee that Edinburgh has the 5th lowest rate of owner occupation of the 32 local authorities in Scotland, which I think most people in Scotland forget.
I should say in the first instance, the figures from ourselves cover Edinburgh, the Lothians and all of Fife as well. So the figures provided in that paper aren't simply focused on Edinburgh when we've looked at those two areas on the market. The short answer to your question beyond that is on do I have figures for the whole of Scotland? Unfortunately not. It certainly would not be a difficult piece of analysis to do, though, to look at Registers of Scotland sales for the last 1 or 2 years and identify exactly what the impact would be across the board. Intuitively, given that the average selling price across East Central Scotland is higher than for Scotland as a whole, you would anticipate that there would be more winners, as it were. More people would pay less than in the area covered by that paper.
Does others have a view on options A and B, or any information about
No, something I've studied in detail.
I was going to ask about sub-sale, but I think that was substantially dealt with by the convener. Although, I mean, I think just to repeat, the uppermost question we have is how do we prevent abuse while accepting your arguments while protecting Scotland's competitive market? But I think that's been dealt with substantially. So it's really a more specific question related to that, to the Scotland Land and Estates. You suggest that conveyances to nominees of a purchaser in a transaction be treated simply as a conveyance directly to the purchaser and not a sub-sale, as I think it is under the current system. And given that transparency in this process to avoid tax avoidance is such an issue, what suggestions do you have in terms of, well, I suppose with regard to the role of Revenue Scotland in accounting for all parties in a transaction?
We're talking about nominee purchases here. Nominee purchases at the moment are fine. They're not excluded from stamp duty land tax. So it would just be a continuation of the existing system. I've got no particular proposals. I think that all we wanted to do was to make sure that, as we put in our submission, sense and practice dictate that the nominee should be treated as the purchaser, as long as there is no abuse.
Another question, I suppose, that relates to the current system from the Council of Mortgage Lenders. You say that we believe the principle, this is your last section 10 in your submission, we believe that the principle of payment of SDLT before registration of the deed is well established, which I wasn't aware of that, because I suppose a lot of people have been saying there might be problems from requiring payment at the same time as registration. But then you do go on to suggest that there could be a problem, and you suggest that the system of advance notices be introduced through the provisions of the Land Registration Scotland Act be enacted before LBBT comes into force. I wonder if you could give us a bit more detail and explanation about those issues.
My understanding, and I'm not an expert in the commercial property side, is there's a difference in payment of stamp duty or land tax in the commercial sector, but in the residential sector it's a well-established principle that normally the solicitor, when they're doing the conveyancing and collecting the purchase price ready for settlement, will also collect the stamp duty and send that off to the keeper at the same time as they're sending off the deeds for registration. In fact, I'm old enough to remember when I did conveyancing at one stage, it used to have to take the deeds round to the stamp office and have them physically stamped with a stamp before you could actually pass them to the keeper for registration. So that's a well-established principle. My slight concern, and why I mentioned the system of advance notices, which is actually provided for in the Land Registration Act, is if there is any delays in registration around the payment of the stamp duty or land tax, the position of lenders would be protected by an advance notice, which gives you a period of, I think it's 2 months, was proposed under the legislation, gives you a priority because of this, the system of the race to the register. The first deed that gets there first is the one that's registered first. So it's really to protect the position of lenders during an interim period. So I think it's quite important that that provision is enacted, and I think the intention is that it will be enacted before this LBTT comes into place.
Okay, thank you.
Okay, John, to be followed by Gavin.
Thanks, Convener. Yeah, starting, Mr Foster, if I can, with your paper, you mentioned exemptions, which has already been touched on. I think you were asked if you wanted any more exemptions. I was going to ask you if you thought we should keep the ones we've got. For example, there's exemption when no money changes hands, there's exemption when somebody dies, and there's exemption for the Crown, which would currently mean that the UK government could buy and sell property in Scotland without, and we would lose out on the tax. So, I mean, do you think these three are really justified, or could we remove them?
I'd like to comment on the last one, Mr Mason. I think the other ones, the one was death, and what was the other one?
If it's a gift, effectively.
Yes, I think they are well established principles, and I think, as we talked about earlier, unless you have very good policy reasons for wanting to change them, moving to this new system of taxation certainly would be a lot more straightforward if you continue with the existing exemptions. And I say they're well established, and obviously there's other taxes payable on the likes of death, etc.
I mean, they're well established, and the result is that rich families stay rich and poorer families stay poor. So would you not think that would be, if we were interested in redistribution of wealth in the country, there would be a logic for that?
I think that's a policy matter for politicians, not one that I would personally want to comment on.
Okay. I mean, I think we also talked about relief possibly for zero carbon homes. Now, I understand there's been very, very few of these. I mean, would there be a risk if the standard keeps increasing of homes, which we would hope it would be, that we'd then see tax falling and falling if there was a lot of exemptions?
I think the issue is, obviously you need to get to a certain place to achieve your targets, and if you use that, the tax as an incentive towards getting there, but would you want to use it for all time coming? I suspect the answer to that is no.
So you'd have to keep revising it. That could be quite complex, couldn't it?
It could be, yes.
Yeah, so don't mind if anyone else wants to come in on that, I don't know. Okay, going on to the Mr Blake, your paper. I mean, I was interested also in some of the comments you made. If we could start maybe at this Appendix 1, which I was trying to get my head round, about B and A and C and all the rest of it. It starts off, B purchases land from A, and then there's a question of B subselling part to C or not selling part to C. And then right down towards the end, the second last bullet point says, this results in double taxation on that part of the land not purchased by B. I couldn't quite understand that because I thought B had purchased all of the land.
He purchases all the land and then subsells on.
Right.
So that the concern there is that there might be two lots of tax payable by B, payable on the land, by C on the land that had originally been bought by B.
Right, so if it would be if B has bought the land and then sells part to C,
C.
so it's not, right, so it is purchased by B but not kept by B.
Correct.
Right, okay, I'm with you, right, okay.
So the title would actually go from A to C, missing out B.
Right.
But there wouldn't actually be a conveyance from A to B for that bit of the land that had been subsold. There would be a conveyance from A to B of anything that B kept, a conveyance of A to C of anything that B had sold on. And so the question is whether there should be a double hit
Right.
for tax on any of that land.
Okay. Now, I think you said that there might be various reasons when I think it was Mr. Hepburn asked you about selling the whole amount on. I mean, is it your contention that if it's two distinct transactions, it is okay to tax them both, but if the two are effectively one transaction, they shouldn't be taxed twice?
Well, I think if only one amount of money passes, there must be an argument that only that gets taxed, rather than. So if A is selling to whoever it is, B or C, for a cumulative price of, let's say, £1 million, and he is getting no more than £1 million, and B is not making a profit in the middle, is there a valid argument for there to be a second bite of tax on any part of that sale?
Be involved in the non-profit.
Can I maybe if I could just give you a worked example that I was involved in Perthshire. I was instructed to offer for a small farm that an estate was selling. My client owned, in fact, I think he was a tenant of a farm fairly adjacent to part of the farm that was on the market. He didn't have the wherewithal to pay the whole price for the whole land, so he did a deal with two other neighbours who were also farmers and adjoined parts of the farm that were being sold by the estate. And after he had concluded missives with the estate, he agreed with these other two parties that he would keep first section, second farmer would get the middle section, and the third farmer would get the other section, so that they lay into the respective farms. The estate only got the price that was agreed in the missives to start with, whatever that might have been at the time. And my client, the farmer, put his percentage of the cumulo price into the pot, as did the other two. So nobody was making a profit there. It was just a sensible way to break up a farming unit to make the other units more manageable and affordable.
Sorry, Jamie wants to come in with a supplementary.
Yeah.
Before I let you continue.
No, indeed, and that's we got another supplementary. I mean, in those circumstances you've described there, though, I mean, how can there be argued that there was two sales? Surely it was just one sale, and it happened to be multiple parties involved in one purchase.
Now, the missives, which I think in law, I hope I'm not wrong here, having been in practice for long enough, the actual conclusion of the missives, when A has concluded a contract to buy from the estate, is the date of sale. And then there are subsequent missives between A, who has bought from the estate, and B and C. But it's only one bit of land that's actually changing hands. So that it can be argued that there are sub-sales. There's a main sale here, and then there's sub-sales underneath.
There's not been any selling. I mean, is this maybe a misunderstanding of what we mean by sub-sale? That would be accurately described as sub-selling,
Correct.
even though there's not actually been a sale.
Correct, and that's what we're concerned, that the legislation is targeting, possibly through policy or possibly not through policy, that there is something there that maybe needs to be looked at.
Into terminology that's
Possibly, but I think that the government needs to be asked whether it is policy to do away with every sub-sale relief, or whether it is simply trying to target sub-sale relief where there are potential abuses and profits to be made.
So we should really be asking the question, is it just those actual sales where there's an actual transaction in terms of cash and people are making money, as opposed to the circumstances you've just described?
I suspect in the example that Richard gave, there would be 3 sets of missives concluded for the sale, wouldn't there? And also 3 separate dispositions of the property at the end of the day?
Well, in that particular one, there was one set of missives between A and B, the estate and A, and then there were 2 other sets of missives. And then there were 3 separate conveyances, you're absolutely right, of the 3 separate bits of land, and so they would each then have to pay stamp duty under the present system, I would say.
I think this is the first time I've been simultaneously more confused and more clear on this.
I don't blame you at all on that one. It's not an easy one.
No, I think the Deputy Convener and I were just saying it would have been easier if the submission had actually had an example like that, rather than A goes to B to C to whatever. Back to yourself, John.
Yes, I mean, I appreciate that. I think what he's trying to say is that was clearer, actually, when you gave the... So that was helpful. Thanks very much. OK. Linked to that, I mean, I think you also mentioned groups, moving between groups of companies, but that would be covered by group relief, wouldn't it, which is separate?
If it was a company that was buying, yes, but if it was an individual...
I see what you mean, right?
No.
Right, and so there wouldn't be a group, I mean, it would just be...
Well, I'm no expert in company law, but if there was somebody coming in from any part of Scotland or out with Scotland who wanted to buy as an individual a chunk of land or a building project or whatever it might be, he concludes missives for himself, so he hasn't got a company of which other companies can be groups, but he then sets up different structures within an organisation to hold parts of that title in different ownerships, whether it be for tax reasons or what, then I don't think it would be covered by group relief, no.
Well, that's a wee bit at the edge of my knowledge as well, so we'll leave
just
that
marginally,
one.
Just marginally.
Marginally, right. Okay. And the other one, particularly in that was mentioned, was the whole question of whether a tax should be in the gross amount, including VAT, or the net amount, net of VAT. I mean, I'm just wondering if it actually makes a difference, because if it's say it's 1 million plus VAT, so 1.2 million, and you add 5% to that, or if you take the net amount, which is 1 million, then you add 6% to that, you would end up with the same answer, because I mean the public purse needs to get the money, so it just means if it's including VAT you've got a lower rate, if it's excluding VAT you've got a higher rate, isn't it?
Yes, I mean I've got no comment to make on that. I think it's a point of policy on whether you tax the tax.
But you would prefer 6% on the net amount rather than 5% on the gross amount, or is it just you'd prefer 5% on everything?
Well, I think you have to bear in mind that not every transaction at £1 million will have VAT on the top, and therefore somebody who is buying a property that does not have VAT on it, because there's been no election into the VAT regime, for example, that person is going to be paying a smaller amount of land and building transaction tax than the person who buys where there is VAT on it. So there is a slight anomaly there as well, I suspect.
So there's a wee bit of unfairness there.
Yeah, I mean, I appreciate it's marginal, but
yes.
I mean, that 5 or 6%, who knows, in 20 years' time could be 15 or 16%.
Yes. I mean, one of the arguments we've had before is that, from countries, people looking to invest from outside the country, if they look at, say, the UK and see one rate and Scotland see another rate, they may not look below the surface, they may just look at the rates. And in that case, if we have to have a higher rate because it's in the net amount, do you think that would put people off, or would that be, they would understand it?
I don't think they'd necessarily understand LBTT. I think it's difficult for anybody to understand that, but I hear where you're coming from. But whether it's correct just to follow what's in the existing stamp duty land tax is a policy decision, I think, for government.
Okay, thank you. Mr Marshall, we've got 2 papers here from you, and I'm not entirely sure what the differences are. I think some figures have been changed, is that correct?
Some amendments to the appendix under option B. Some of the figures were lowered there. I should apologise to the committee for that error. I identified it yesterday.
Yeah, it was just, I haven't had time to go through it line by line.
Sincerely apologise for that.
I see there's a difference in paragraph 12. Is it just paragraph 12, do you know?
It is just the very final section with the numbers on the difference paid at various levels, and actually you will find that there is now a greater number of people benefit under option B and a lower number of people who lose out, and also that the differential in taxation is lower. So again, I apologise for that.
That's all right. That's okay, just as long as we're kind of clear about it. Yes, I mean, Mr Hepburn raised the kind of questions as definition of rich already, so I'll maybe not return to that one just now. The question of setting the rate is mentioned, I think, in your paragraph 17, and you note that the banding will be introduced in April 2015. We have had some suggestions before that it would be good to know that as far ahead as possible. Is that all of your views as well?
I think our view would be that the most important point at which we would like there to be expediency, shall we say, is the part between when a decision is made and communicated to the public and when that is implemented. I think absolutely there should be as much time taken as is necessary to set the right levels of taxation. But once it has been communicated to the public, we would want to move as swiftly to implementation as possible, because otherwise you could see a scenario where people who realise they could benefit by bringing a transaction forward would do so, and likewise people who realise by delaying a transaction until after implementation they could save some money. You could see some short-term disruption there. So I think that would be the main area where timeliness would be an issue.
Okay, thank you. And I think you also said, if I picked you up correctly, that you'd quite like to see some of the higher rates reduced and some of the lower rates increased, or perhaps introduced at a lower level. I mean, is that's your view, is it? Because the effect of that would be to tax people who are less well off more and people who are better off less.
Sorry, if I should clarify that. I would be talking about, I think in option A, there had been a suggestion that we could move the lower threshold of stamp duty up to £180,000 from where it is currently at £125,000. Our previous experience of the stamp duty holiday, which was in place until last year, was that did not have a significant impact on the number of transactions in the market. So perhaps by leaving a very low rate of taxation there, it would allow a slightly lower rate of taxation towards the upper end of the market, but certainly no, I think you would still want a higher rate of taxation at the higher end of the market. That goes without saying.
Because presumably, I mean, it talks about, you know, that being a significant financial burden on families in the Edinburgh area. But I mean, presumably one of the results of that, some of the prices at the top might just come down a little bit if there's tax. For buyers is a good thing.
Potentially that is something that you could see, yes, you might, if you were to take the view that people simply have a pot of money to spend on a house, be that house price, be it tax, whatever, there is the potential for that. The one thing I would say is that it perhaps in the short term would increase the additional finance which people needed to raise to make that move up the ladder in some cases. So there may again be some short-term disruption there.
Okay, thanks so much.
Okay, Gavin, to be followed by Jean.
Yeah. Just a question about subsale relief, which has obviously been covered in detail. The Scottish Government made its position clear that it doesn't want to mirror the provisions currently in SDLT, and I think for understandable reasons. The question then becomes, can you have a targeted subsale relief which exempts some of the transactions that might be described as genuine commercial transactions, while excluding ones which are merely tax avoidance measures? How, looking at it from the government's point of view, how easy would it be to define the types of transactions that could be exempted and the types of transactions that simply shouldn't be exempted? Do you have views on that now, or is that something you could reflect upon and assist the committee with, to any of our panellists?
I would certainly be very happy to take that back to my little specialist group, two tax lawyers and a tax accountant, to give that consideration if it's something that would be of use to the committee. We'd be very happy to do that. I think it will be very difficult, A, to get the terminology right, and B, to police it. That would be the other problem, I suspect. That I guess that one of the arguments for closing down the relief altogether is that it's easier to police. Yeah, I mean, if you'd like us to have a look at that, I'll see whether I can get the group to come up with anything, because I know it's something that they hold close to their heart, because it's something that is a very useful professional tool for them in planning.
That would be helpful. I mean, certainly as it stands, there will be no subsale relief. I mean, that is the position. The government will almost certainly not just bring in subsale relief as a whole, but the door is slightly ajar potentially for some targeted relief. I think if the case can be made, I mean, what they've said is that they will listen to the conclusions of the committee and to conclusions of stakeholders. If your members are, believe this is a genuinely important economic tool, if they can convince the committee and the government that there are certain examples where it should be allowed, then who knows what the government might do. But if they can't, then my suspicion is subsidy relief will just be excluded. So if it's something that you can do, I think it's something that definitely would be of value. I don't know if other panellists have views on that.
It's the commercial side as opposed to the residential side.
I think that's right, and I think that the Law Society or ICAS, the Chartered Accountants Institute, would be probably as good a place to start to get something that is specifically targeted for their practitioners.
The other thing I wanted to ask about that hasn't already been covered, non-residential leases. Clearly a complex area, and there is further consultation and discussion with likely amendments at stage 2. And most organisations who've given evidence, either written or verbal, have basically said it's a complex issue, and we're glad it's going to be returned to. From a committee point of view, though, is there anything we ought to be aware of now as a committee in relation to non-residential leases that we ought to be looking out for and asking about?
If I could just perhaps give one or two thoughts from the rural sector, and that's all I'm not coming from the commercial sector at all, except where it impacts on rural estate owners. There was one example that I brought up in the passage of the Land Registration Bill. Oh no, sorry, the Long Leases Bill. That's what it was. The Long Leases Bill, which actually is possibly an example that is worth looking at here. A major East Coast golf course development, huge amount of money put in by partners, commercial partners, to enable a development under a long lease, which is why we raised it under the long leases legislation, and it would have been caught by the long leases bill if we hadn't drawn it to the attention of the parliamentary committee at the time. My understanding from what I can recollect about that lease was that there was no rent payable for the first X years until the turnover. Obviously the golf course has to mature and publicity and get the Americans over and the Japanese over to pay £200 a round or whatever it is. So the rent, the decent rent to the estate didn't kick in for a number of years. So that is a turnover rent situation, and I think this is what I suspect the specialist subgroup is looking at just now, that how do you tackle turnover rent situations where there is no specific sum up front at the beginning of the transaction. Normally in these residential purchases or rural purchases, farms or whatever, you have an amount in the conveyance, or you have an amount in the lease, and you can target that with whatever the rates are. But in these particular cases, golf courses, some agricultural leases, renewables leases, absolutely critical at the moment to get that right. Turnover rents will be paid later on once the energy comes on stream. How do you get a formula that is going to be sensible, fair, understandable and workable, and also policeable? I think these issues, and I know that the subgroup has been working very hard on it. We've been copied in on all the paperwork that's been coming out of the subgroup, and I know that I haven't seen the results of the last meeting, but I know that they were working on a matrix to pass to the Cabinet Secretary to give him options and to show the consequences of the various options. And I think that is a very clear way for hopefully for the Cabinet Secretary and also this committee to look at it. But I think that's the key thing. The turnover rents is going to be the issue.
Very helpful. Thank you. Thanks.
Dean?
Thank you. I mean, it's been really interesting listening to the answers so far, and some of the question marks I had have been answered. But just to go back to the, I'm sorry to do this in a way, but to go back to A, B, and C. I have to get in my head. I mean, we are really keen that the stamp duty land tax that's in existence, I think in all the evidence we've taken, has been seen to be complex, and liable to abuse and so on. And the scenario that you painted, I have to say that I feel is probably a very vulnerable area in terms of tax evasion. The more parties involved, then the more complicated the land deal or the sale would be. But I just wanted to ask you, in the normal way of things, if somebody's buying a bit of land, the conveyancing is done, there's the return of a new title and so on. Is that not that work that kicks in the stamp duty?
Yes, it is straightforward purchase and sale, whether it be residential, commercial or rural. That would happen. You would have the offer put in and accepted. There would be missives concluded, which is the absolute done deal as far as purchaser and seller are concerned. And then there will be a time of getting the due diligence sorted out, paperwork signed, and then at completion, the purchase price is paid over, the stamp duty is paid, and the deed goes off to Register House for registration and absolute title. No difficulty with that at all. But where, I mean, the example that I gave you of a farm being sold and the whole farm not being of interest to one particular person, it suited 3 farmers to expand their businesses, and these days you need bigger farms to get profitability.
That all sounded very practical,
right?
But I guess what I'm getting at is that it's unlikely that it would be one agent that would be working for the farmer and for the successors to the land that he bought. I mean, presumably everybody would have their own representation.
They would have their separate voice.
The practical business of doing that. Who then would be registering? Who then would hold title? And how would that be divvied up? And why would that not be? I can't quite understand the reason why that would not be seen as a sale on. I mean, I'm missing something, obviously.
It is a sub-sale. That is absolutely a sub-sale, which would be caught. In practical terms, there would be 4 sets of solicitors involved in that situation, one acting for the seller, one acting for the original purchaser who had concluded the purchase, and then other solicitors would be acting for parties C and D. And it's just the way it works, otherwise there could be conflicts of interest all over the place. The missives would have stated that the original purchaser, B, would be entitled to have the title in his name or in name of who he wanted, and that would then give him the option to sell on. Now, I fully understand that if he was selling on for a profit, then there would be potential abuse and additional tax that would have to be paid. In this particular situation, the 3 dispositions, 3 conveyances would be prepared, and stamp duty would be paid on the individual transactions by the individual solicitors. The seller is not interested in who pays the tax at all. The seller just wants his £1 million or whatever it is, and he's out of the equation. So it would then be down to the 3 other sets of solicitors to make sure the paperwork was in place. Now, of course, in that situation, the original purchaser, B, is actually potentially exposed if he can't sell on bits to B and C, if he can't get the funding. So he does leave himself in a potentially vulnerable situation there. But I think just to run that example through, you might well get a foreign purchaser of land in Scotland, or a Scottish purchaser of land in Scotland, an estate which might be made up of farms, houses, cottages and businesses. And they may say, right, we'll conclude missives to buy at whatever the price is, and then they will see an opportunity to sell off bits. Now, that asset stripping is something that I can understand might be a policy objective of the government, Scottish government, to look at. There have been lots of cases in Scotland in the last 10 or 15 years where landed estates have been bought up by a property speculator, and then cottages have been sold, farms have been sold, houses have been sold. Now that is a sub-sale for profit, which I think is where the differential comes in to the first example that I was giving. I don't know whether I've explained that sufficiently clearly, but there are 2 very different examples of what can happen in the countryside there.
Thank you. Well, that's an end of questions, and I'd like to thank the committee for the questions, more importantly witnesses for coming along and giving the answers. Thank you very much. I'm going to call a 5-minute suspension in order that members can have a natural break. Okay, I shall recommence the session. The committee will continue its oral evidence session on the bill, and can I therefore welcome to the meeting David Robb from Oscar and Gavin McEwen from the Charity Law Association. So welcome to you both this morning. I understand that there's no pre-prepared statement, so we're going to go straight to questions. Now, I have to say this is a difficult kind of session for me as convener, because both your submissions, one is 2 pages and one is just over 2 pages, and it can be difficult for me to hold back and not ask all the juicy kind of questions, therefore depriving all 6 members of the committee of an opportunity to ask. So I'll try not to do that, and I know that Malcolm's already keen to come in, so he'll be first after myself. So I'm just going to ask a couple of openers so that the committee has a chance to explore this matter in the depth I think we need to explore it. First of all, Mr McEwen, you say in paragraph 8 of your submission that there is a cost to charities and need to amend their constitution to satisfy the Scottish registration requirements. There are also ongoing compliance costs, including annual reporting costs. I'm just wondering if you can tell me, you know, how much this kind of one-off cost might be to an average charity, and also the cost of ongoing compliance.
It will vary from charity to charity. If you look first of all at the initial costs to comply with the Scottish Charity Test and to get onto the Scottish Charity Register, typically that involves a constitutional change. So it's a simple change usually to Articles of Association if you're a charitable company, or a change to a trust deed. And these may cost a few £100s if you need to get some legal support, and that by itself is quite straightforward. With a charitable company, if the membership of the company though is sizable, if there are a large number of members, it may actually be quite difficult logistically to get people together for a general meeting, and that can add to the cost and just the process involved to actually put through a constitutional change. If a charity is created, however, as a royal charter body or is created under an Act of Parliament, then the process becomes much more involved, because typically you will either need consent from Parliament, either the Scottish Parliament or the Westminster Parliament if it's an English-based charity, or from the Privy Council if you're created as a royal charter body. That is a more expensive process, and that can typically cost maybe £5,000 or more to make even quite a simple change to a constitution. So for that kind of charity, it can be quite costly to make what looks like a very minor change. In terms of ongoing requirements, the costs are not great. I would say that financially the costs are not great, but there is a commitment involved to comply with Scottish charity law generally. So there's a bit of a dual burden of regulation to be satisfied, and that does create a bit of extra work and effort on the part of the charity. But in terms of cost, I would say the cost is not substantial. So it tends to be front-loaded, and in some cases it may be quite small, but in some cases the cost may be a bit higher.
How many charities are we talking about? Because both of you have said in your submissions that it's a small number. How many would we be talking about in a year, do you think, would be affected with this legislation?
It's difficult to estimate. I would say at the moment we're probably talking about dozens, maybe up to about 100 in total. Not very many more than that. And they would all be within the UK. So we are talking about quite a small scale issue here. There may be a very tiny number of charities created outside the UK who'd be affected, but I think that would be literally a handful. So I think we're talking about dozens, up to 3 figures, not thousands.
Do you concur with those kind of figures?
Yes, very much. I mean, we don't have detailed numbers. We're engaging with HMRC to try and get a better estimate, but that would be very much our sense of the scale of this. Probably, you know, maybe just touching into hundreds on the UK basis, and outside the UK, excuse me, a tiny handful. So to give you some estimate of the scale, I think Gavin's absolutely right with that.
Okay, in terms of who this actually impacts upon, Mr. Roberts said the intention of Section 14 was to ensure that only charities with significant operations in Scotland are required to register with Scotland, register with Oscar. Sorry, you know, what would you define as significant operations?
What the 2005 Act seeks to do is to create a comprehensive register that the public can used to give them confidence that charities active on the ground, delivering services in Scotland have a sense of registration. But there will be lots of charities on a UK basis that might fundraise through a TV campaign, so people might send money to a charity based south of the border. It's quite proper for them to refer to themselves as a charity, even though they don't have significant operations in Scotland. So the 2005 Act was trying to strike a reasonable balance between giving people in Scotland confidence that charities active in Scotland were properly entered in the register, but recognising that there would be charities from beyond Scotland still legitimately raising money or making grants, but wouldn't have to go through the full registration process.
Finally, before I open it out to the committee, you say in your submission, Mr Robb, that there's a question as to whether bringing such organisations permanently under the full scope of the Scottish Charity Regulatory Regime is a proportionate way of providing assurance that they qualify for what may only be a one-off relief on one transaction. Is it?
In my view, no. In my view, I think there's a simpler fix that's more consistent with the general thrust of the 2005 Act. And I think as we've been exploring this collectively, this tiny problem for investment decisions from beyond the UK essentially, but as the bill stands, even including those within the UK, I think that has emerged, and I think there's probably a better solution than the one that's on the face of the bill at the moment.
Well, I'm not going to explore that because I'll steal the thunder of colleagues who no doubt will. I'll therefore open up to questions with Malcolm first, followed by Jamie.
I was interested in the Section 14 exception. Well, I suppose the first question to David Robb is, has anyone actually voluntarily registered under Section 14?
To my knowledge, not completed the process. We have had occasional inquiries, but it's difficult to know who would seek to register in Scotland if they weren't planning to be active in Scotland.
I mean, I must say I was slightly surprised by what you said about that, because it does appear to deal with some of the problems that other bodies such as the Wellcome Trust and indeed the Charities Law Association have raised. But where does it actually say in Section 14 of the Act that you can register on that basis? Because the title of Section 14 is exception for certain bodies not in the register.
Yeah, I'm sorry. I will tread carefully in this area. I'm not a legal expert, and I know these are very complex matters. What we need to look at is the interaction of Section 13 and Section 14. Section 13 is the one that requires charities active in Scotland to register. Section 14 permits charities to refer to themselves as charities, but without being on the register. So that deals with the situation I was describing earlier, where say an English-based charity is raising funds in Scotland, but it's not on the ground active. It's perfectly proper for it to refer to itself as a charity, but it's not required to register. Now, there's been a bit of confusion in some of the evidence that you've received about whether or not charities can choose to register. They can do that if they think they would meet the Scottish Charity Test, but it's not clear to me why they would choose to do it. The matter in front of the committee at the moment is in order to qualify for the charity relief, as the bill stands, they would have to register with us, and we're not sure that that's the appropriate mechanism, because at the moment we don't have a stream of charities, not even a trickle of charities, seeking to voluntarily register with us unless they plan to be active in Scotland.
So in order to get the relief, they would have to voluntarily register. So I suppose the two questions around that are, well, the cost has already been touched upon, but your comments on what the cost might be could be interesting. But I suppose more substantively, in order to register under Section 14, would they still have to meet the Scottish Charity Test, which could be a problem for some bodies, presumably in England or elsewhere?
Yeah, they would register under Section 13. Section 14 is about referring to yourself as a charity but not being registered. So if they voluntarily sought to register under Section 13, yes, they would still be required to meet the Scottish Charity Test. And the test says that you must have exclusively charitable purposes and you must be providing public benefit in Scotland or elsewhere. So we have charities, for example, properly registered in Scotland, but their activities are overseas. So the public benefit might be provided overseas. So the 2005 Act does create the possibility that a charity in Venezuela could apply for registration in Scotland. And if it could demonstrate to us that it was providing public benefit in Venezuela and that its constitution was exclusively charitable, meeting those tests, we could accept it onto the register. Having done so, they would then have to follow the rest of the regulation procedure, so they'd be required to submit annual returns to us, and if they ever came off the register, we would have an ongoing interest in their assets. And it's for that reason we don't have a lot of interest from charities beyond our shores seeking registration unless they want to be active in Scotland. In that case, registration is the proper route. But in our view, to go through the full registration process simply to allow yourself to benefit from the charity tax relief on an investment decision, that feels a little disproportionate.
So are you implicitly suggesting that you think that bit of the bill needs to be reformulated? I mean, presumably you still want relief for charities, but you think that the need to register with you is perhaps going too far?
Yes, I mean, I think some of the written submissions you've received have a point that, particularly for charities south of the border, and that's the large majority here, there are easier routes to allow them to be identified as bona fide charities without entering themselves onto the register for what might be one single transaction.
Okay, thanks. Well, the Wellcome Trust was one of the main bodies that raised concerns about that. They also raised concerns about cases where the property is a joint purchase between a non-charity and a charity. I mean, I think that already doesn't get relief under the current SDLT system, but the Wellcome Trust is arguing that as funding for charitable organisations become more competitive and scarce, joint purchasing of resources with non-charitable groups might become increasingly necessary. And they suggest that a purpose test with regard to properties purchased between charities and private companies be included rather than completely prohibiting relief in that circumstance. Do you think there's any merit in that suggestion at all?
I would hope Gavin has a better grasp on this. I must admit I studied that bit of their evidence and found my head burling at that point. I'm no expert on I mean, some of the formulations there about the extent to which it's joint and how you'd apportion it, the different interests. That left me a bit bamboozled. In operational terms, that I think at the moment would be largely a matter for HMRC to determine about where the benefit was and the entitlement, and that's not really something that as Scottish Charity Regulator we are directly involved with. We will make the decision about whether a charity should be on a register. If it is, we will regulate it, but the reliefs are administered through HMRC, so I think they would have a better operational understanding of that, but Gavin may, with his expertise, be better placed to disentangle that one.
I can't speak for the Wellcome Trust, obviously, but there is a paragraph or two in our written submission on the same point. And what I would say on behalf of the Charity Law Association is that looking at the court case that we highlighted in our written submission, which I know the Wellcome Trust also referred to in their written submission, which is the Pollen Estate Trustee Company case, what the judge said in that case was that in terms of the SDLT regime, it wasn't clear that there was a deliberate policy either in favour of or against relief to charities where there were a range of co-investors, but the black letter of the law meant that the relief had to be denied. What we at the association would like to invite Parliament to consider is whether there should in fact be a policy, a specific policy on this point, just to be clear about it. I can see why charities who do co-invest in order to purchase the property would like to gain relief on their element of the property. But I can also see that that doesn't match the current practice under SDLT. So I think it has to be a policy decision. And from our point of view at the association, we're simply inviting Parliament to explore whether there is a policy decision to be made.
Thank you very much.
Okay, Jamie, to be followed by John.
Thank you very much, Convener. A question for Mr McEwen in bullet point 10 of your submission. You suggest that your organisation considers that registration as a charity with HMRC in accordance with the provisions of Schedule 6 Finance Act 2010, provisions with which I confess I'm not intimately aware of, it should be a sufficient requirement for exemption from LBTT. Of course, HMRC isn't going to have responsibility for the collection of this tax. This Parliament doesn't have legislative authority over HMRC, and nor does the Scottish Government have any executive authority over the HMRC, so could that not lead to problems itself?
Well, I take that point on board. Our suggestion at Section 10 was intended to reflect broadly the structure of the current tax relief. But having been fortunate enough to be able to read Oscar's submission, the alternative proposal which Oscar has submitted, which may present a solution to any difficulty around the charity relief test, would, I think, satisfy the association. And from that point of view, we'd be willing to go along with, in principle, something along the lines of Oscar's suggestion instead of our paragraph 10 suggestion.
Come to that in a moment, because I want to explore that. So you do recognise there were limitations to that suggestion, and
yeah,
okay,
absolutely.
okay. The next paragraph, you're also concerned that charities may be unable to benefit from the charity exemption when they co-invest in property in Scotland jointly with other investors. What's your solution?
Well, again, that's really what I was just talking about a few moments ago, where I don't have a solution, and we're not really arguing that there should in fact be a relief there. We're simply suggesting or inviting the Parliament to consider whether there's a definite policy to be made on that point.
Would you suggest that there should be relief in the entire transaction?
No, I don't think that would be fair. I think if there were to be relief under those circumstances, the policy would have to be that only the elements which related to a charitable purchaser should be relievable, but not to the entire transaction. I don't think that would be fair otherwise.
Well, and also presumably it would act as an incentive for every investor to hook a charity onto them.
Absolutely. No, I completely agree with that.
I mean, isn't that going to be rather complicated though? We're talking, I mean, we've had a lot of evidence to suggest that, you know, let's keep this really simple. You know, try to disaggregate parts of an investment for taxation purposes. That sounds pretty tricky to me.
Yeah, no, I can completely see that, and that's why we're simply stopping short of presenting some kind of solution, or actually even arguing against the idea of refusing relief on those transactions, but inviting Parliament to make a policy decision.
I suppose what you're really saying is it's something we should be aware of, but there may not be actually be a solution to it.
Precisely that, yeah.
Okay. This issue of Section 14, Mr Robb, can you tell me what's the purpose of Section 14? What does it actually allow a foreign charity to do in Scotland?
It allows it to say it's a charity, and it allows that not to be a problem. Okay,
I kind of got that from what you've said, but I mean, they're not allowed to do anything. They're not allowed to raise funds. They're not allowed to have a presence. Is that correct?
No. They might collect funds.
They might collect funds.
Yeah.
Okay. On that basis, then, presumably Oscar has a degree of oversight. You have to regulate that, because you still have to ensure that these charities have a genuine charitable purpose.
We would occasionally get concerns raised with this by members of the public wondering if somebody was legitimately presenting themselves as a charity, and sometimes those would be charities not on our register, but meeting the criteria in Section 14. So we might be able to advise, if we found a body representing itself as a charity that didn't meet these criteria, or that should in fact be on the Scottish Register, then we would have powers to take action there. So Section 14 is trying to strike a balance between a comprehensive register that captures all the on-the-ground significant activity in Scotland and a situation where Scotland in the international community will be open to messages from charities from overseas.
But I mean, the point is that, and I suppose you've answered this, I mean, you have the ability to investigate whether that is a genuine charitable purpose and take action if it is found that there's not.
Yeah, but it
so,
doesn't,
I mean,
but it doesn't arise very much.
No, I appreciate that, and clearly, you know, we're spending a lot of time on this when we're all aware that the circumstances about which we're discussing in terms of LBTT aren't going to arise very much, but nonetheless that's what we're discussing. I mean, given that's the case, it doesn't sound to me as though it's an overwhelming burden, certainly for Oscar, to have to maintain a register as is proposed within this bill.
I don't think the burden would be large for Oscar. I mean, there would be work involved in investigating the circumstances of people applying to join the register. And as I say...
Case anyway, though.
As is the case anyway. But as I say, if the charity is overseas, it can be harder for us to establish the facts about the situation. But I think, given that the vast majority of applicants for this relief are going to be within the UK, as Gavin outlined, you know, possibly 100 or so from the UK, a handful from beyond the UK, the burden would fall on these charities applying to the register. So it's not so much the burden on Oscar that we're concerned about. From Oscar's point of view, we think there is a risk about the integrity of the register being eroded. People at the moment take confidence from the fact that we have a comprehensive register in Scotland. That's not the same in other parts of the UK, and everything on that register meets the charity test and is clearly a recognisable charity in Scotland. If we start accepting non-Scottish charities whose sole reason for application is an investment decision, that starts to dilute the integrity of the register.
Could you explain that a bit more for me? I mean, why is it dilute the integrity of the register?
Because we would include on the register charities who don't really otherwise have a profile in Scotland. Their only intention in applying to the register is to benefit from the tax relief, and I think people would see that as a slightly unusual situation, that our register should be there to capture significant charitable activity, and you know, they might regard that as an unusual use of the register, and certainly not one that it was designed for.
We're talking about here, we're talking about people in the third sector, we're talking about members of public. I have to, none of my constituents have ever raised concerns about the integrity of Oscar's register with me. I
mean, our purpose is to reassure the public. I mean, that's the purpose of the regulation. So ultimately, if there were a charity overseas that was applying for registration, seeking to make significant investments in properties, that introduces a potential risk there that at the moment we're not particularly well placed to police.
What about the argument, and I'll pose this to both of you, you know, the argument that essentially with this, I mean, I think there's acceptance that charities from Firth of Scotland should be able to benefit by the exemption. I think that's pretty much accepted. I don't think we've had anyone say that it shouldn't be the case, but then the argument would be that essentially the Scottish taxpayer is then subsidising a charitable purpose out with Scotland, and the very least that charity could do is register with the Scottish Charity Regulator. Do you think that's an argument that has any merit at all?
I think from our point of view, the granting of the charity relief dependent on registration, I think you need to consider whether that's actually a proportionate thing to expect a charity to do or not. And given that a charity will have to amend its constitution, but also then become subject to the entire body of Scots charity law, simply in order to gain a tax relief, which Parliament has said it wishes that charity to pick up if it can, I think that would be disproportionate in our view.
What if there was some form of supplementary register, like a separate register, but still held by Oscar? Would that make sense? Because I mean, at the end of the day, even within your recommendation, you know, someone's going to have responsibility for check. There's going to be a burden falling on someone, and you've already accepted within terms of Section 14 to an extent this exists for Oscar. Someone's got to check that, you know, it's a bona fide charity. You know, they actually are a genuine charity.
I think there's a lot of merit in the suggestion of some form of supplementary list, and I know you've had evidence to that effect. I think there's a role for Oscar to be involved in that. As I say, operationally, Oscar doesn't administer tax relief. So I think as Revenue Scotland gets into its stride, in the same way that we now have dialogue with HMRC around some of these issues, we'd expect to have dialogue with Revenue Scotland about eligibility. At the moment, for the vast majority of transactions, the question doesn't arise because the charity is based in Scotland, it's properly on our register, and therefore HMRC can rely on that eligibility, and that will continue to be the case. But at the margins, where a charity is not on our register, and you know, in our view, it's desirable for it not to have to go through that whole registration purpose just to demonstrate eligibility, then I think you are getting into territory where you hold some sort of supplementary list. Now, who holds it and who makes the decisions about that, I think is the area that we need to be exploring.
Okay, I think that's helpful.
Thanks, Convener. Yes, I mean, to continue this kind of area, as I understand it at the moment, one of the key lines is whether a charity is occupying property or not occupying property. And if it is occupying it, presumably for its office, that would kind of bring it in. And if it's not occupying it, then it kind of leaves it out. Is that correct? I mean, presumably the whole reason for having the register and Oscar and everything is because people were calling themselves charities who might not be. And I'm assuming that the Scottish standard to be a charity is higher than some other countries?
Very much. I mean, in many parts of the world, there's nothing that we would recognise as a charity regulation system.
Well, we must treat all EU countries at least equally, so we can't be too discriminatory. But I mean, presumably the risk is that organisations somewhere out there, who in our understanding would not really be charities, come in here, call themselves a charity, and get relief. So that's why this is here. Is that correct?
Yeah.
Yes. And so there is a risk in this, as well as the costs we've had already explained to us. There would be a risk. I mean, as I understand it, one of Oscar's kind of guidelines is as well that charities should not sit on assets, but should actually use their assets. And if a charity is just sitting on piles of money and it doesn't go down, there's questions asked about that. I mean, should there not also be questions about charity that buys property and then just sits on the property, whether it's Scottish or overseas?
Except that, if I could come in, that charities are obviously entitled to invest their assets, and there's a duty under charity law to invest assets which you don't immediately need for the purposes of your charitable activities. If that means that a charity has a large amount of cash, for example, that it doesn't need immediately for its charitable activities, it should be investing those funds, and that may mean investing partly in stocks and shares, but it may also be investing partly in property in order to have a diversified range of assets. So there is a legal duty to invest assets not immediately required, and from that point of view, I'm speaking for Oscar here, but Oscar are content that charities sit on funds, if you like, which are legitimate investments and which aren't immediately required for charitable activities.
And I agree entirely with that, but if we saw evidence that that was all a charity was doing, we would have concerns. The charity test requires the active provision of public benefit, and simply sitting on funds, whether invested or not. One of the early issues that Oscar had to deal with was a lot of dormant, frozen charities that were providing no active benefit. And although they may have been established for charitable purposes, the Scottish Charity Test requires the active provision of public benefit. And a lot of our regulatory activity is focused on charities where we've got a concern that the active public benefit is not demonstrated. So Gavin's absolutely right, but if that was their exclusive activity, we would have a concern, because that wouldn't seem to us to meet the test.
And that's going to be trickier for you if it's an overseas or foreign charity that you might not know if they're doing activities or not. Yes.
As I say, it doesn't arise very often, and it's not what the 2005 Act was really designed to capture, and we would just have a worry about being drawn into that kind of activity. I don't foresee sending teams to Venezuela to check their activities, but that's potentially the kind of situation that could arise in a tiny number of cases.
So that's dealing with charities outside Scotland. I mean, I just wonder too with charities within Scotland. It seems to me there's two kinds of charities here. There's real charities that actually help people, and there's kind of what I would call pretend charities, which used to be parts of councils and things, and they now provide leisure services, and they've managed to get through the hoops, and they're called a charity, and they get relief, but they're not a charity in the traditional sense of the word charity. And in fact, some of them have been set up with the sole purpose of avoiding tax, particularly business rates. So, I mean, I just wonder where we're going with this, that do we just accept that anyone who's called a charity gets all this relief because they've satisfied the Oscar test? Is that right?
We would describe the situation slightly differently. It's undoubtedly true that there is a great spectrum of activity that currently correctly passes the charity test. And we don't distinguish between charities that are very charitable or only just a wee bit charitable. If you're on a register, you're there because you meet the charity test, and that was the test that Parliament agreed we should apply, and we do that consistently. Now, I recognise the situation you're describing. We have lots of things there that you stop a man or woman in the street and you'd say, does that look like a charity to you? They'd say, absolutely, it traditionally fits with their mould. But one of the assets in the third sector is its flexibility, its capacity to innovate, and what we're seeing is a charity label that is evolving quite rapidly to respond to different situations, and I think that's a good thing, and it's as I say, something we should value about the third sector. But it does mean that we continually need to modernise our understanding of what that label and brand charity means, because it encompasses a lot of things at the moment that surprise people. So I think the challenge is to make sure that our understanding of the label charity keeps up with the times. There are tensions in that, and it's quite possible that over time we decide that we need to start different categories of charity. But at the moment we have one test. So it's not a very sophisticated system to address what is a very diverse 23,500 charities. Tremendous diversity in that sector. And as I say, I think in general that's a strength and should be encouraged. But I do recognise the situation you describe.
For the purposes of this legislation, we really need to just continue treating all charities as charities and all the same, but maybe at some other stage that needs to be looked at, yes.
I think it's important to stress that as well as existing for a charitable purpose, a charity, part of the charity test is that a charity must actually provide public benefit. And that's a big part of Oscar's assessment of charities, both at the point of creation and as part of their ongoing regulation of charities. So if a charity only existed in order to secure relief from non-domestic rates, there would be a good argument that that was not providing public benefit. So there needs to be a very deliberate attempt to provide public benefit to satisfy the charity test, and that's something which Oscar does actively police and regulate.
Just continuing the same discussion, really, is there a kind of big business in charity? In setting up charities, and would there, for example, just looking globally or at least across the United Kingdom and Europe, would there be a situation where somebody could, in Scotland, establish a charity offshore or register a company elsewhere and operate that you wouldn't take any interest in? I mean, what are you aware of loopholes or movements, you know, given the growing number of charitable organisations that we have, Where is the line in the sand where you would get nervous about?
Yeah, I mean, I think from my point of view, I'm a full-time charity lawyer. So I see a lot of charities come across my desk day in, day out, and lots of problems that charities bring to me, and concerns that other people have about the charity sector. I don't see widespread abuse along those lines. I don't see people creating charities offshore in order to get around tax rules or other regulatory requirements. So I think when that does happen, it's a very rare occurrence indeed. In fact, I can't even think of the last example that I saw that was happening. What tends to be an issue is that charities are not actually spending their money domestically properly. And there are cases like that which do come up from time to time, and Oscar rightly investigates those. But it tends to be a different kind of issue. It tends not to be offshore entities trying to, if you like, grab our domestic tax relief. That doesn't happen very much.
And I guess just as a kind of supplementary to that, then are there, I suppose, where are the issues in terms of if we're proudly saying that actually meeting the Scottish charitable the test is our standard is very high, and your examination of purpose of the company and so on is absolute. Is that do we equate with the rest of the United Kingdom countries? Are we better than that, or the rest of Europe, or are there issues to do with that standard that we have?
It's difficult for me to say categorically. The position, even at the moment across the UK, is slightly different. It's only in the last few months that the charity regulator in Northern Ireland has been able to get up and running. After a period there was some difficulties about establishing the basis of their charity test. Charity Commission has been established for a very long period, and our own regulatory body is still quite new, so that the position in different parts of the UK at the moment is different. I don't have encyclopedic knowledge of how things work across Europe, but as I say, my impression is that the systems are very different. I would absolutely underline what Gavin says about the rarity of these kinds of incidents. I mean, our view on Oscar is that willful misconduct on the part of charity trustees is extremely rare, and the great bulk of activity that happens, it should not be a matter of concern for anyone. But it can happen, and there are instances where people will seek to actively abuse the system. I suppose my message might be that if I was seeking to abuse the system, there might be easier systems to abuse than the Scottish system. And I think one thing that Oscar does quite well, because of its comprehensive register, because of the scrutiny we exercise to accept charities onto the register, and because of our ongoing scrutiny, is as I suspect there would be easier systems to exploit if you were so minded.
Okay. That concludes the questions from the committee, and indeed myself. I'd like to thank you very much for your contributions this morning, which has certainly helped our deliberations. And at the start of the committee, we agreed to take the next item in private. I therefore close the public part of the meeting. So we'll have a brief break in order to allow the public an official report to leave.